You already know what it is. Back again with the Hollywood trades. We are on NASDAQ today. I just wanted to do a quick live markup on this one because I actually haven't been tracking this price. I just know we're charging all-time highs, and there's no reason to think that we are not going to keep charging all-time highs, even with the creation of bearish order blocks. I'm going to, these were the markups that I was making. Of course, these are all markups that I always would make, um, always explained out the way that I marked them. And that's pretty much what we would end up with in this zone. Uh, Bearish order block, we closed underneath the highest candle. As I say, you close, you monitor the low of the highest candle. If you close under it, you do mark that off as an order block. There is an FVG that is right up under that. There is no order block connected to this FVG, so usually it's the order block that's going to stop price from closing under an FVG. There is no order block here on this time frame, so we would expect this to be a very nice short position. If you did close underneath this, you could start waterfalling these lows here. These lows, none of these lows have been swept. I don't always mark the relative levels. I would say relative equals or unswept lows in this case. But on the way to an imbalance, when you get unswept lows, this is pretty much a 70 to 80% chance it's going to go in here. There's no order block here. The nearest order block is here, or I should say consolidation zone, where price traded sideways and left bearish blocks. So obviously, there is something that's not marked, which is this FVG here. I'm not really concerned about FVGs when there's an order block and an IFVG, because as you see, the IFVG boundary is already taking effect on price. We've already gained a bearish close. This here could be termed a manipulation block here. That's just too many markets in this zone for me. So what I will do is just say that we are having bearish activity at that level. And so pretty much right there, as you can see, you do close below that level, and then you see break. This is a break, and then our next candle is expected to retest. This is what timed entries are all about. Timed liquidity delivery is all about, because when new candles open, there's something strange about when new candles open. It gives you that you wouldn't expect the retest of this candle's level until this next candle. A lot of people just fail to observe those simple mechanics. So with that being said, we do have this low here that should be definitely in targeting. If we're closing below, getting lower low, lower low, at some point we get this level. This level is, I mean, I don't even expect it to sweep this level and then go bullish. I do expect this, excuse me, to get here. And so that's pretty much where I'm at right now as far as price goes. This block is where I would want to buy from. Excuse me, that is the wrong color as well. This block is where I would want to buy from. However, we do have imbalance range also here. Would be very interesting to see it come down to grab the rest of that imbalance as well. This one has been corrected, so I like to trail. If we're in a rally, I do like to trail these balanced zones just to know where the balance levels are, where we don't expect price to go down to. This is already balanced price, so we shouldn't have to go below this order block here for a rally. I mean, that doesn't mean we won't, especially if we start getting hella FEGs on the way down, and or if the daily is trying to perform some type of CRT function here. We can potentially get something strange going on, where we just waterfall to that CRT target. I would hate to see that. It's not what I would think. This is the highest candle. We can definitely stop hunt this candle here easily, and that would be that low, and then go back to the high. That should be. I mean, that would be a very easy trade. Even if we rebalanced and retested this level here, that would be a really nice rebound back to the highs. Anything within here, giving us an hourly order block or something like that from anywhere below this low, because it won't create an hourly order block, or it definitely won't create a 4 hour order block. If we a bullish order block, which is a bearish candle closed above as a support range, we won't see that. It'll just keep testing those highs and rejecting those highs on the hourly and the 4 hour all the way down until it's ready to go, and then it'll close above that. Those are the things that people fail to realize, those simple mechanics. I do wish more people understood these mechanics, because this industry would be a lot less spooky, or I should say, it will be once people start really paying attention to those candles and how they're being used. Like even right now, right? We come to the hourly, right? And there is only, I mean, there is an imbalance level here, and there was also, see, right? An imbalance level there. It did dip into that level just slightly, right? Rally into that level right above this candle. This is the lowest candle, right? You got a lower low, lower low, lower low, lower low. Then you hit the high of a candle that made a lower low, and then boom, then you go down, right? You start clearing all these little imbalances, little small imbalance. All of this was like, what I could say, relative, unswept levels right here. It's like tinder to the fire. That is gasoline. That is petrol to your fire. And so with these on the way down again, we're going to get bearish imbalance. It's only going to get tapped into, right? And then you keep going. Of course, you can close. Of course, you can close over previous. Like I said, this is what you'll get. Sometimes you will get a close over previous bearish candles, usually only to get to an imbalance and then to keep going, right? We closed under this candle. So now this candle plus the small piece of imbalance, and it didn't even balance at all right here, but there's a sliver from this low to this high, a little bit of an imbalance, and it almost cleared the whole imbalance, but not so much. It is going to, it's a rejection block actually. So we have a bearish order block, which this level is now being tested. That's a break and retest right there. And then this is where I would not know what to mark until I looked at volume. I would use the highest volume candle out of these two. It would either be this one, which is the highest bullish candle, or this one, which is the highest candle in general. Of course, this is a boundary level right at this low. I believe this one being the highest volume candle here. And then this little bullish imbalance between this low and this high is a boundary level that got crossed through pretty easily because there's no orders there. So pretty much I'm going to use the highest order volume candle here. And I'm going to rejection block that. Right. And then obviously this low right here is, uh-oh. So we're about at 10 minutes now. That pretty much covers everything we're pretty much thinking. All of this stuff, once you get used to marking it so you don't even think about what to mark up, and in most instances, um, unless you get something like what I just had to do and look at the volume. But it's always the imbalance. It's always the high volume candles. It's always the imbalances, highs and lows of candles that cause the BOS, and targeting, if you have a bearish imbalance, targeting lows. If you have a bullish imbalance, which would have been right here, we would have targeted highs, but got traded through. So now we're back to targeting lows. It's always the same thing over and over. It's pretty much how it goes once you start realizing what price is actually trying to do. Um, when it comes to these highs, lows, and imbalances, that's pretty much the name of the puzzle. And this game is very much a puzzle. This order block right here, right? This bearish zone right here would be our ultimate support in this range. We do have a bullish imbalance, bullish imbalance, bullish imbalance. So it may definitely, we're going to look at the highest volume. Let's just look at the highest volume candle in this range, which is actually these two candles. And so this low is charged. This whole range is charged, plus this low being charged. And of course, this bearish candle was the highest volume candle. So a lot of orders went in here, and a lot of orders got disrespected. Bots don't like to set stop losses for the most part. They like to just mitigate. That's what high frequency trading is. They like to mitigate, and use their levels, to mitigate when the price comes back. This is how they work. And so that's why you'll see, this range be used as it should be used as ultimate support if we even do get down there. We are super hyper bullish, especially with this DXY news. But pretty much this is what we're looking at. There is nothing else really. If I missed anything, definitely feel free to put that in the comments. Other than that, uh, let's just take a quick peek at the weekly. There ain't nothing, there's nothing to see here. Our break and retest level is way down here. It was not way down there. It's only 100 something pips, but yeah, pretty much that. This weekly low would definitely give us a very nice entry. Anything inside of this imbalance range would give us a nice entry. But yeah, we are flying high on NASDAQ. This is our nearest order block range on the weekly. We would pretty much 100% chance not trade through this without at least visiting these order blocks or these wicks on the way back up, or that way back down. If we were to go through these, we would definitely come up and then come back down. But yeah, a long way away from that. Volume is definitely very much bullish. Another buy wave is starting here, as we see. So this buy wave can definitely keep going, or it can be divergence. Either way, we are there, and that is the case. Until next time, definitely share and give me a comment. Let me know if we're on the right track. Appreciate you, and be safe out here.